Hello and welcome to Business Today. I'm Siddharth Zarabi and with me now the co-founder and the CEO of Razorpay, a company that was last valued at $7.5 billion. Harshil Mathur, welcome to our studio. The sun is out bright and sunny. I really want to begin by asking you to put in context the kind of work that you do at a global level. You know, I've just seen some data and we were discussing this about the kind of lead that India has when it comes to this space. Take our viewers through some of the data points.
Fintech is one thing where India has clearly established a lead. We are much ahead than most markets in the penetration of digital payments. The last 7 to 10 years, the pace at which digital payments have grown in India is just mind-boggling. Right? Like I meet a lot of folks, global folks here, and when I tell them that 50% of all real-time payments in the world happen in India, it's just hard for people to believe. People can't fathom why, like, isn't China bigger, isn't these markets bigger, and it's hard for people to believe. And even today, most markets, you can't send money to somebody and have it instantly settled. Something that we do on a daily basis, something we send money to even a pan wala on the street or a rickshaw driver, and it's settled instantly. It's just mind-boggling. And I think that's one thing that, while we've done great in India, it's an opportunity for us to take it to rest of the world as well. And that's what, like, UPI is going global. Companies like ours are trying to go global behind it. So, and that's the journey we started a couple of years back. So we launched in Malaysia, we are launching in Singapore, we are launching in the rest of Southeast Asia, we have some operations in UAE as well. And the idea is that hey, as we have created the best fintech ecosystem in the world, how can we share our learnings, our products and our services in other markets where they don't have something similar to UPI and the ecosystem around it?
Would it be fair to say that we are a Vishwaguru when it comes to fintech?
I think in fintech in particular, I think there's no doubt that we are. I mean, even the US is just trying to build real-time payments. They're trying to replicate something like UPI, and still far away from that. Thailand has launched Prompt now. Malaysia has Do It now. All of these have come in last couple of years, and if you look at them, they look exactly similar to UPI, but they still don't have as much penetration as UPI is able to draw. And I think one of the examples I gave is that the largest internet companies in the world came from US, because internet came from US. As India's fintech goes global, there will be an opportunity for Indian fintech companies to go global with it as well.
What is the recipe that is allowing this performance to happen?
I think the biggest driver of this is the India Stack ecosystem that the government has pushed, which is truly a public-private partnership play, where the public core infrastructure is like UPI, the core infrastructure like ONDC, they're built and maintained by government or government-related entities, and the private players can build on top of it. That partnership is the key, and that allows it to be interoperable, so there's no walled gardens. Irrespective of which UPI app you can use UPI across the country. It allows the delivery to happen at extremely low or low cost of free. Prime example being UPI, ONDC being far cheaper than most direct apps, and most importantly, it allows the ecosystem to just propagate by itself. It doesn't matter whether I am pushing my QR codes out there, it doesn't matter whether you are onboarding customers on your UPI app, the sum of the parts becomes the larger ecosystem. And that's something I don't think anywhere else in the world we have been able to replicate.
I want to relate an example here for those viewers to just sort of connect this point that Harshil made better. I was recently traveling overseas and using the local city suburban rail transport network, and I realized that that on the same network at some distance you had to approach it through different ways. The same online payment system was not working on that, and that kind of for an Indian seems very surprising. Behind the success of this and companies like yours, 10-year-old company, what really drives the technology? Is it something that you're doing locally and sort of developing use cases, or is it something that you have learned from somewhere else?
I think it's a combination. A lot of research and development that companies like ours do is done. We have our engineering team is based in India, so we do it in India. But we also, of course, also want to learn from the best markets. For example, AI is a place where there are a lot of companies doing some amazing work across the world. We try to learn from those and try to bring those capabilities in India. In payments in particular, I think around fraud monitoring, around customizations, around personalization, there's so much that AI can do, and we're trying to learn from what is happening in various parts of the world and try to bring some of the learning to India. But if I talk about like the core payment infrastructure, that's something that India has uniquely developed. So the kind of flows that we have been able to build on top of UPI, the kind of use cases they're going to solve for UPI today, I think those are some things that we have to build in India, because there was no example anywhere else in the world of using real-time payments to drive adoption.
Harshil, many companies from India have ventured into overseas markets. They've taken over local companies. They run telecom networks. They've done steel, automobiles, you name it. In your space, in the fintech space, some of the geographies that you mentioned, when you go there, what are the unique challenges that you face, and how do you kind of overcome them?
Yeah, so fintech is a regulated, especially payments. The area where we operate is generally a regulated space, at least in the most of the developing world. In every market, we have to go and get licenses. You have to set up local teams, or local compliance and monitoring teams, and then apply for a license in those local markets before we can start operation. So that part takes a bit time. So it's not as simple as, hey, let's just build and launch in that market. Let's just make it available to those customers. We have to have local partnerships. We have to have local bank partnerships, and only then we can go live. So that takes a bit of an effort. But once you're through that, I think one of the great examples is because India has such a deep payments and fintech ecosystem, and it's very strongly regulated as well. There's a lot of respect when we go to these markets and tell, hey, we operate in India, we are a large player in India, and we are very closely regulated in India. So we have all the things that you would expect a company to have in your market. I think that part is respected a lot, but it still requires some effort to go through those approvals and compliances, and that's an effort we'll take as we go into more markets.
Harshil, I also want to take this opportunity to help our viewers understand better the fintech story from your company's story. As I understand, when you founded in the United States, and in the recent past, we've been hearing that you are flipping and coming back to India.
Yeah.
Why are you flipping?
Yeah, so when we started the company 10 years back, it was hard for foreign investors to invest in India structured company, because they didn't understand the regulations, they didn't understand the complications of the market, and also at the same time there was no public tech IPO market in India. So 10 years back, it was hard for investors to believe that they'll get an exit in an Indian market. And that's why companies like ours were structured either as a US company or a Singapore company. For us, it was a US company. But in the last 3-4 years, that sentiment has just completely flipped over. India is today the best market for public tech IPOs. The success of a lot of IPOs over the last couple of years, combined with the efforts by the government to simplify ease of doing business, and the trust that the foreign investors are starting to have in India's regulations, in India's legal systems, in India's legal frameworks.
And policy continuity.
And policy continuity. I think that's been a big driver. And today, investors want a company like us to be better based in India, because India is our home market. Everybody knows us, everybody loves us in India. Right? There's no point of us doing an IPO in any other market. So we want to go public in India, and that's the reason we decided to flip back to India.
By when do you hope to go public?
I think we'll at least take 2 more years to go public. Our payment business is profitable and doing well, but there are a lot of newer business lines that we have in the offline world, in the international market, on Razorpay side, that we want to continue to grow. I think those will take at least a year from here to go profitable, and with that we'll go public in next 2 years.
Since you spoke about the gains of coming to India, I'm sure there must be a flip side to this flipping, which is, what do you lose by leaving the US?
There's a significant tax component that will come our way, that we'll have to part with. But I think in the larger scheme of things, given India is our home market, that's a small price to pay. It's not a small cost, but it's a small price to pay.
How large, if I may ask you?
I can't give an exact number because it depends on the final the final numbers and how the market's value is, but it could be in the range of somewhere between $100 to $300 million.
So roughly between 850 crore to 3 times that, but those are very substantial sums. And I want to also get you to tell our viewers about something that we keep picking up in our reportage, which is that the fintech industry in India, after having a great bull phase, has now entered the phase of a reality check, and perhaps even harsher reality than many would have anticipated. What's your own sense, not just from the business where you clearly have a dominant market share, how's the fintech industry as of 2025?
So first of all, I want to call out that fintech is a very broad term, and
Yes.
while we use it uniformly, it is different ecosystems. So there's a consumer payments ecosystem, there's a business payment ecosystem where we operate, there's a lending ecosystem, there's a wealth ecosystem, and each of those have their own nuances.
And dozens of players.
Dozens of players, a lot of competition. I think if I were to put it net, I would say that the fintech ecosystem in India is still growing rapidly. I think what is happening is that there's also a bit of consolidation. A lot of players have gotten large, and as those have gotten large, they want to consolidate and offer all services under one single ecosystem. And that's why on fintech side, there's a lot of push towards super apps and universal apps, right? And there are super apps on the consumer side. We would say Razorpay is like a super app or a platform on the business side where we help businesses do payments, collections, offline payments, get access to lending under one single platform. And when you start doing some of these things, then things started folding together. So I think that's where some of the ecosystem is moving towards. But if you look at the overall fintech story, it's still the fastest growing ecosystem of all internet ecosystems in India. And if you look at payments in particular and our story in particular, like in last 4 years, we've grown on an average of 60 to 70% year over year for the last 4 years constantly. And that's hard at our scale, but it's happening because A, the ecosystem is growing very rapidly, and B, there's so much scope to innovate constantly. The regulations are constantly opening up more areas to innovate on. Recently, India, the regulators opened up the cross-border space, which is very rapidly growing, and so many other areas that are opening up on the fintech side. So I am very bullish on the ecosystem.
You think you will be able to sustain this kind of phenomenal growth?
I mean, as long as we can continue to be the most innovative company in our segment, that is my only focus. So the only thing that I'm worried about is us getting complacent. As long as we can continue to find newer areas to innovate on top of the changes that are happening in the ecosystem, I think India is a market where 50-60% growth is not very hard for any player in the digital space.
Are there any concerns around the regulation? We have seen the regulator sort of act in the recent past in different cases, not perhaps in the business that you represent, but very broadly at an industry level. Is it that the regulator is catching up and this is a sign of maturity in the sector because this is after all a regulated space, not just in India, all across the world?
Yeah, and see, I think there is a perspective that regulator has, there's a perspective that companies have. A lot of times tech companies misunderstand how regulation has to be managed, right? So it's not just about following the letter of the law, it's about following the spirit of the law. And that's where most of the differences of opinion happen, that hey, this is what is written, so we are doing right by what's written, but if you're not following the spirit, what is written is going to constantly change.
But on the other side, is there a gap of understanding in the authorities?
I don't believe so.
Okay.
I believe the delta is that the direction in which authorities go with. So as a internet company, we look at the top 1% and see how can we make their lives better. The regulators have to look at the bottom 1% and how they can avoid their lives getting worse. And that's where the delta happens. So it's not a gap in understanding, it's just the perspective with which each is trying to do things. But I do believe that we have a very open and constructive regulatory environment where the regulators are generally open to feedback. Any new change that happens, they generally put a draft out in the public, we can all send comments. I think in the last so many years, I haven't seen any regulation saying that, hey, don't do this. Whatever they have come out is, okay, you can do this, but do it in this way. Whether it's the digital lending guideline, whether it's a tokenization guideline, whether it's the recurring payments guideline, all of those has been, you can do recurring payments, just do it with these set of rules. You can do digital lending, but do it with these set of rules. And I think that's the right approach.
Another data point that fascinates me, you yourself are a sizable unicorn, but you handle and process payments for close to 80 of India's 100 unicorns. Is that number?
86, yeah.
Oh, okay, so if that was a pass percentage in school, that would be a great number to have. But are you happy being a B2B player, or in all of the expansion that you might be considering, is there a B2C niche that you spot anywhere in India or overseas that might interest you?
So, while we are primarily a B2B player, we do offer services to consumers via our platform. So, for example, we have Magic Checkout, where we allow a customer to save their credentials across Razorpay, which is their shipping details, their coupon details, their loyalty details, and so on. So, we do build consumer interfaces where consumers can create a profile with Razorpay, use it across our merchants. What we don't do is consumer monetization. So, we don't do revenue from consumers. We primarily feel that in the growing ecosystem like ours, the consumer should get these services for free. The business side, which actually makes money on top of the consumers, that is the ecosystem that should pay. So we monetize only from the merchant side and the B2B side, but we build products and services that touch consumers as well.
That's a good point you say, where you say that you believe it should be free. And on a different note, I have heard other players in the broader industry who interact and are dependent on UPI or facilitate UPI work, they've kind of spoken about the lack of margins there.
Yeah.
The government is very clear. They want to keep it like a public good and keep it the most affordable. Is that sustainable in your experience and expertise?
So I believe there's somewhere in a middle ground there. I think for consumers and small businesses, UPI should remain free. I don't think there's any doubt in that. I think you can't expect a small roadside panwala to be paying for UPI when he earns so little. Same for a consumer. You are using to send money to somebody, you should never be paying for it. And I think in most of the markets in the world as well, consumer payments remain free. I think as a growing ecosystem, we should remain, for small businesses, we should remain free. I think the delta is that for very large businesses that can afford to pay for the infrastructure, I think at some point we should figure out a way to charge them. What shape and form that takes, I think we can figure out as an ecosystem. But for very large businesses that pay for these services elsewhere in the world, the largest conglomerates in the world, the Googles of the world and so on, I don't understand why it should be free for them. And so at some point, the larger businesses should pay for it. And in that way, it will also subsidize the payments for small businesses and consumers.
And perhaps the RBI should be addressing that, or maybe are already.
I think there's a lot of discussion that keeps happening on that. At some point, I think they'll change. We must just have to find the right time and way to do it.
As we wind down the conversation, since we are at Davos and you were earlier telling me that this is your first outing here, you couldn't make it before that. The theme is the intelligent age.
Yeah.
How are you seeing this inflection of AI and everything associated with it? And I keep reminding myself not to say AI, but generative AI, because AI in some ways dates back many years. But the coming together of technology, AI, and this new wave, a platform shift, perhaps the biggest and most fundamental after the age of the internet. What sense do you get here in your interactions with a lot of people?
I think the AI is such a fundamental change, as you rightly put it. It's such a fundamental change, it's going to change every industry. And I think in next 2 years, the companies that can find a way to leverage AI to grow their business are the only ones that will survive. Because if you don't leverage AI and figure out a way to leverage AI into your ecosystem, you are bound to get disrupted. And that is what like a lot of folks here are trying to learn and understand how AI plays a role in their industry, how AI plays a role, for example, for us in financial services, around servicing, around personalization, around customer servicing, around fraud management and so on. And the companies who do figure out the best way to leverage AI to separate themselves from the crowd are the only ones that are going to survive. And that's the biggest change that you've seen, as you said, in terms from since computerization and then since internet. And I think it's something as fundamental as that. And every company has to spend time in figuring out what's the best way for them to leverage AI.
Absolutely. And as they do that, I want to end this conversation by reminding our viewers that the man sitting next to me, the co-founder of Razorpay, is going to end up paying a very substantial, the company is going to end up paying a very substantial sum of money to exit US and do ghar wapsi to India in some ways. And I think that should be celebrated for the right reasons. Harshil, I wish you all the very best for that and for your listing, and hopefully at that time to do a deeper dive into your financials.
Definitely.
Once you go down that path.
Yeah,
all the very best.
Thank you.
Viewers, with that, it's a wrap. We'll be back with more. Until then, goodbye.